Good evening, viewers. I welcome you on this webcast of the Institute of Chartered Accountant of India, organized by the Committee of International Tax. Today, we are dealing with the mandatory reporting of foreign assets and foreign source of income, and we'll be dealing with the various intricacies in this. And we have been joined by Shri Sitesh Verma ji from the department. He is a 2013 IRS and presently is posted at JCIT OSD in Investigation Unit 6, and he's looking after the automatic exchange area in the CBDT, and no one best can be there from the department to clarify the various things which will arise in respect of the disclosure, which is the requirement of the day in the schedule FA, and the consequences of non-disclosure, etc. As you know, the Committee on International Tax is a non-standing committee of the Institute, and this year the Honorable President Shri Charanjot Singh Nandaji have nominated me as the chairperson of this committee, and my vice chairman is Chandrasekhar Chitle sir. And today we are organizing this webinar for the purpose of making awareness among the members for their clients and for the entrepreneurs also. Today's webinar will be like this. Sitesh Verma sir will give the overview, and then we are joined with CA our Jaikumar Tejwani ji, along with his team member CA Deepak Kakkar ji and CA Jatin Sapra ji. And friends, this our committees on international tax, as you know, in beside all these programs, we do run two courses or certificate courses. When one is the UAE corporate tax certificate course, the another is the diploma in the international tax. And our faculty, Tejwani ji is also faculty in most of our program, and he knows every bit of the problems of the members. And we also have finalized the US taxation course, and which will be launched somewhere in the month of the January. Already we are publishing preparing the background material for the that particular US taxation course. And your suggestions, your inputs are always welcome. So with this background, I will request Sitesh sir to give the overview of the today's webinar, and what are the precaution members should take, and some of the problems which have been given to us. We have received a lot of queries, and I think more than 1,000 members are going to live this virtually today, and a lot of questions which have been uh, given to me or was being faced by me while having the interaction pre this webinar. I was just discussing with sir that there are certain problems which we need to handle, and those he'll be covering, and in the question answer we'll handle it. Over to Sitesh sir.
I am thankful to the Chartered Accountant Institute that they have invited me for this deliberation here and for just about knowing the problems being faced in reporting of foreign assets and income. As you all aware that CBDT has launched Nudge 2 campaign. Nudge means non-intrusive usage of data to guide and educate taxpayers. So this initiative is regarding trust taxpayer first. Now the department has changed its focus from taking cases under scrutiny whenever we come to know about any misuse of provision or any non-reporting by the taxpayer. We just have resorted to send them SMS and email and tell them that the department has information about their non-payment of taxes or non-reporting or claiming wrong deduction. So the department has launched nudge campaign not only in foreign asset but for claiming wrongful deduction under section 80 GGC or 80G. Although those are not the point to be covered here, only reporting of foreign income and assets is the main point which is being covered in this Nudge 2 campaign, which has been launched on 28th of November. And board has sent SMS and email to the taxpayers after proper risking, and only to those for which we have reported information from foreign authorities, foreign jurisdiction, that they are having their financial accounts or insurance account or debt and equity account, something like that. So we have sent SMS and emails to only to those taxpayers who are filing their return for assessment year, who have filed their return for assessment year 2025-26, but not filled their schedule FA, means they have not reported their foreign asset and income in proper format in return. It may be possible they might have shown it in some other at some other place, but it is mandatory that they should report all their foreign income and asset in schedule FA, FSI or TR. So we are just educating all the taxpayers, and Chartered Accountant Institute is the largest forum which can help income tax department to sensitize and educate taxpayers through all members of Chartered Accountant Institute and all tax professional. So this initiative has been taken in association with CA Institute for sensitizing all taxpayers to report their foreign income and assets properly in their income tax return. Thank you.
Friends, I just wanted to mention about the how much devoted Siddesh sir is this. He was just briefing me because of this webinar. He drove from Jaipur and there was zero visibility, and he was much worried about that I should be in time in the shoot, and he drove in the morning. So let us thank to him that he has come all the way to the shoot for delivering this webinar. Sir, let me also assure you that our member, they take all precaution, but sometimes there are certain things which the client never tells, or they are not in their knowledge. So we will be also covering those cases where they have been not been able to give it in this 25-26, as well as in any of the previous year, how to handle those problems also. With this, thank you very much for this particular your gesture of coming here and gracing this webinar. Over to Tejwani sir for the further proceeding in this regard.
Yeah, thank you, sir, and thank you, sir. And I must acknowledge the initiative taken by ICAI on a very, very important topic, which is the mandatory reporting of fixed assets and the foreign assets and foreign source income. This is something which is of critical importance for all those who are global in terms of their nature, you know. And as we all know, with the increase in the globalization, the movement, the cross-border transaction, FA and FSI has acquired significant importance. And to deal with the disclosure of the foreign assets and the foreign source income in the income tax return forms, there is a special section for disclosing these things, the foreign assets as well as income. And as sir just mentioned, there is the initiative called as Nudge 2.0. And for all of you, and before I start, I request all of you to just keep your notepad or whatever handy along with your pen, so that we are able to take relevant notes. So Nudge 2.0 is not a notice, it is just a kind of a awareness that maybe you have missed it. You have missed disclosing your foreign assets or FSI, and just be, it's just a preempt to ensure that we fill in. Okay, and it's actually a early warning as well in case we are not able to comply with the requirement. It is a kind of early warning which may also could invoke scrutiny or 148, and even this is covered by the Black Money Act. So again, black money also comes into picture when we are dealing with the foreign assets and incomes. And few important points, as I mentioned, in the ITR, there is a schedule for foreign assets. There is also a schedule for foreign source income, which we are going to cover in details today. And very important question, who is required to fill in foreign assets and FSI schedule? It is only for the residents, ordinary residents of India. It is not applicable to the non-resident Indians or to any foreigner or the person who is not the ordinary resident of India. And most of the income tax forms, except Form 1 and ITR Form 4, these two forms, they do not have FA or FSI schedule. So in case a taxpayer has foreign assets or foreign source income, they have to file other forms like 1, 3, 5, etc. Similarly, the reporting period of foreign assets generally is the calendar year. It is not the fiscal year, it is the calendar year. So, say for example, we are in financial year of 24-25, which starts from April 1, 2024, and which ended on 31st of March 2025. The FA reporting would be for the calendar year 2024, that is January 1, 2024 to 31st December of 2024. Okay, so and third, very important is that in many schedules, we are asked to report the peak balance reporting. Again, the peak balance, what peak balance is that we are going to cover, is to be reported for the calendar year. So in this particular case, for the year 2024. And there would also be questions on, when we are filling up the schedule, the status of holding. So in case you are an owner, you are the one who has initiated, you may be required to fill in the status as owner. Even if you have a joint owner or a co-owner, they would also be called as owner. So while filling up the status, this concept is to be noted. Similarly, if you are a beneficial owner, what is beneficial? We are going to talk about it. Then in that case, you have to mention that you are a beneficial owner. There could also be a beneficiary in case of trusts, etc. So the name of the beneficiary, if you're filing as beneficiary, that needs to be filled up. Another very important point which arises while we are filling up is what should be the foreign currency conversion rates. So as far as conversion rates are concerned, so for income purposes, there is Rule 115, okay, which says that the last day of the immediate previous month conversion rate is to be taken. So when we are reporting FSI, we have to follow Rule 115, which means that in case you have earned some income in the month of, say, May of 2024, April 30, 2024 rate is to be taken. But as far as fixed foreign assets are concerned, it has to be a real time rate as on the date of conversion. And the rate again is the State Bank of India TT buying rate. Okay. So this is again important. And again, another very important point is that held at any point in time during the year. So in case we are filling up the calendar year 2024, though you are reporting the income from April onwards, but any asset acquired, say in the month of March 2024, is also to be reported. Even any asset which you have committed in March, paid for in April, is to be reported. So there is complete clarity by the CBDT and even in the forms that it is about the calendar year. The purpose of keeping calendar year is to ensure that, and of course, the source of the information with CBDT or with the department is FATCA, TIES, and various other informations. So they are basically based on the calendar year. So don't get confused that I am filling up the form from April. Do I need to report anything acquired in the month of Jan, Feb, March? Yes, it is for the calendar year. So these are some of the very, very important points that needs to be kept in mind. And then the FA schedule. FA schedule is not at all complicated. It is just about understanding. Deepak and Jatin, they are going to talk about it. So FA schedule has 10 parts, or we call it 10 tables, starting with table A1 and ending with table G. All the schedules are very, very well explained, the title along with the columns given thereunder. And I'm sure, even you read it, you'll get how best it is to be filled up. And so we'll start with table A1, and with me is CA Deepak Kakkar. Deepak Kakkar is a qualified chartered accountant. He qualified in the year of 2010. So Deepak, let's go to schedule A1. Yeah?
Yeah,
And I request you to please take up schedule A1.
thank you, sir, for the opening remarks and the kind introduction. To start with Schedule FA, most of us generally think that Schedule FA is applicable only when a client has any foreign income or foreign asset. But in reality, Schedule FA is far wider than this. So now we are also experiencing the situations where FA cases are opened just because of an old offshore insurance policy. So the real problem is the client often doesn't know what exactly is the schedule FA and what exactly is foreign asset or foreign income. So that is what we exactly will discuss today, and where schedule FA applies, where it is generally missed, and what we as a professional can do to avoid litigation or problem for our clients. So as sir told that schedule FA covers table A1 to table G. It is 10 tables. So schedule FA was introduced with effect from AY 2012-13. At that time there were only 5 tables. So it has evolved over the last few years as per global patterns. Now we have 10 tables in schedule FA. First is table A1, which is reporting of depository account. Depository account, as the name suggests, it asks the details of foreign depository accounts held, including any beneficial interest at any time during the calendar year. So emphasis is you have to see the information pertaining to calendar year has to be reported. And for AY 2025-26, calendar year 24 will be applicable. So earlier in this table and in entire schedule FA, this word calendar year was not written. So to give more clarity, CBDT has come up with this word. Earlier it was written that it was accounting year, so it was creating confusion. So now it is very clear at any time during the calendar year ending as on 31st December 2024. So right from January to December 2024. Depository accounts generally means like we are having a saving bank account or FD account or time deposit account in India, and definition is also given in rule 114F. This includes any commercial checking, saving, time or thrift account or an account that is evidenced by a certificate of deposit and so on. So commercial accounts are also part of table A1 accounts, that is accounts used for business transactions, checking accounts that allows deposits and withdrawals, typically used for everyday transactions, saving accounts, like I said, and then time accounts. So these are normal saving accounts that any resident person has kept overseas that has to be reported in table A1. And the information required is country name, country code, name of financial institution means name of the bank, address of bank, then zip code of that country, account number, status. So in various tables in schedule FA, it requires and asks to select from drop down what is your status. Like Jaisar said, there may be status, it is divided in three parts. You can be owner, you can be beneficial owner, and you can be beneficiary. So each one of three category of owners or holders has to report all the accounts in their respective schedule FA. Then it asks account opening date. So if you have account opening date, you have to mention this. If you don't have, then you may mention any respective date, like when you receive the account opening mail, etc. So this is a disclosure only. Peak balance during the period. So peak balance has to be seen from January to December, and it has to be converted on the particular date of the peak balance you have maintained in foreign currency. Closing balance is of course of 31st December. And then last one is gross interest paid credited to the account during the period. So from January to December, the total interest received by you has to be reported in this particular cell. So this is all about A1. And we can understand this with the example also. Mr. Varun maintains a saving bank account with Citibank in Singapore. The account is held in his own name. The details mentioned in its bank accounts are as follows. So bank name is Citibank, type of account is saving bank, reporting status is like we discussed, it may be three status: owner, beneficial owner, or beneficiary. So in this particular example, he is the owner, he has held this account for his own benefit, so he can mention owner as well as beneficial owner. But as per CBDT guidelines, once you are owner as well as beneficial owner, you have to mention owner only. Closing balance as on 31st December. Peak balance in this case was as on 19th February. So you can see that this is not a part of financial year, but you have to see peak balance as on 19th February only. Interest income earned during the year is converted as per rule 115. It's 64,000. Address is of Singapore. Account number is given. Account opening date is also given here. So how to fill table FA? Table A1 is country name Singapore, name of institution Citibank, address Singapore, account number is given here. Status we have to select, and we have selected here owner only. Account opening date we have. Peak balance is converted bank balance as on the 19th February. Closing balance is converted value as on 31st December. Gross interest paid was also given, so we have mentioned accordingly. So this is simple. And there are some critical issues also. For example, if an SSC transfers his or her bank account during the year, so the question arises whether he or she has to report only the latest balance, latest account, or both of them, or previous one. So the answer is you have to report both the accounts, and first one account has also to be disclosed. In this case, closing balance will not be required because you have already closed the bank account before 31st December. So you can take peak balances only for the months it was active, and then you have to select another row and add another bank, which in this case is Citibank, and opened in August. Then you can report peak balance from August onwards, whatever it the case may be, and closing balance as on year end will be reflected of this particular account only. Another critical issue may be sometimes the assessee asks whether husband and wife jointly hold a saving bank account. They both have to report, or only husband or primary holder has to report. So the answer is both husband and wife has to report their account in their respective FA schedule, and they can mention the peak balance and total value or closing balance by both of them. So it is not as linked to the your income computation. Both of them can very well report this in their respective FA schedule.
Thank you, Deepak. Thank you. I think very well explained. A couple of points in table A1, that in case there is a owner, say husband in this particular case and wife, she is also the owner. So the form, that is just a table which has 8 columns, it has to be filled by both of them. Okay, and this is not FSI. This is not about foreign source income. Both of them will report the same figures. Okay, FSI schedules will come later. So note that there is no confusion in terms of filling up the information in the form. Okay, like there was one column on the gross interest paid credited to the account during the period, and here the period is the calendar year, that is 2024. It has nothing to do with your foreign source income. So both the husband and the wife, they will have to report the same number here. Yeah, and again, very important point that he mentioned, Deepak, and we have to all note that in case the account is closed during the year, even that account is to be mentioned. If there is a new account open, that also needs to be mentioned. Okay, so this is how it works, and I again request Deepak to also take us through table A2.
Yeah. So table A2 is reporting of custodial account. This is another type of account. Unlike depository account, custodial account, as the name suggests, is the account where a custodian holds and safeguard assets on behalf of the investor. For example, like in India, we have our investment in Zerodha, Grow Capital, and similar other apps. So in foreign countries and jurisdiction, we have accounts or broker like E-Trade, Drive Wealth, or Morgan Stanley, in which generally ESOPs or RSUs, etc. are maintained of the assessee. So these are the account which has to be reported in table A2, and the definition is also given in rule 114F of income tax rules. Custodial accounts means an accounts for the benefit of another person that holds one or more financial assets. So if any investment is being held in custodial account, that has to be reported in table A3, which we will discuss later. But only the cash balance which is maintained in this particular custodial account has to be reported in table A2. So similarly to the table A1, the information asked is country name, country code, name of financial institution, address, again zip code, account number, status. Again you have to select between three of the drop down options: account opening date, peak balance during the year, closing balance. The only difference from A1 is this: you have to select from the drop down here gross amount paid credited to the account during the period. So in table A1 only the interest portion was mentioned. Here you have all the options: gross amount mentioned, gross amount paid credited to the account during the period. So you can select interest, dividend, proceedings from sale of redemption, etc. But as I said, the investments are not to be reported in A2. Only the cash balance has to be reported. So generally only interest component is applicable because we are not reporting investments here. So dividend or proceeds, etc. is not to be reported here. Let me see if there are any examples here. Yeah, so the example is Mr. Shubham opens an account with his funds, with his own funds in Morgan Stanley, US based broker, that is held in the name of his wife, Mrs. Sheetal. Also, all the benefits and entitlements arising from this account are enjoyed by Mrs. Sheetal, his wife. The details are also given. So here we have given the example to cover both beneficial owner and beneficiary. This definition is given in section 139(1), who is beneficial owner and who is beneficiary. Beneficial owner, like Jaisar said, is the person who has paid consideration on behalf of any other person for the benefit of himself or any other person. And beneficiary is the person who is enjoying the benefits from the assets and the consideration is not paid by him or her. So in this particular example, we have covered both beneficial owner and beneficiary. In this case, both Mrs. Sheetal and Mr. Shubham are required to disclose the relevant details in the, yeah. So the information given is for the account is country name, name of financial institution, address of financial institution, account number, status, account opening date, peak balance, closing balance, and gross interest paid if any. Nature of account, nature of amount, yeah. So in this case, both Mrs. Sheetal, who is a beneficiary in this case, and Mr. Shubham, who is beneficial owner because he has paid the consideration, are required to disclose the relevant details in their respective FA in the manner below. And this is the extract of what will be the FA of Mr. Shubham in table A2. He will fill country name as USA, name of financial institution, you can mention the name of broker, in this case Morgan Stanley. Address is of USA, account number is mentioned. Mr. Shubham is beneficial owner because he has paid the consideration. Account opening date, peak balance is the converted value as on the date in which on which highest amount is maintained. Closing balance is of 31st December again. Gross interest paid was nil, so we have mentioned here nil. And nature of amount, since no amount was received, so no amount paid received. Accordingly, Mrs. Sheetal will also report the same particulars in their table A2, but with the change status as beneficiary.
Thank you, Deepak. I think very well covered. So again, same point to be noted that in case there is a owner and a beneficial owner or a joint owner, everybody, all of them will have to fill up this form, this particular table, and everything same will be reported. And again, take a note that it is not a FSI. It is only a disclosure. So particularly, we get stuck where the gross interest paid credited to the account. So there is a confusion that one person has already declared it. No, it is only disclosure for the calendar year. FSI related information will flow in the later tables. Yeah. So thank you, Deepak, and maybe you can take us also through table A3.
Yeah. So we are now.
नीचे ले आओ ये, दिखना नहीं चाहिए. Yeah, और थोड़ा नीचे करो.
So we are now on table A3, which is reporting of foreign equity and debt interest. So this is most commonly used and applicable table of schedule FA, where NSSC has to report their any equity investments, ESOPs if received, RSU, etc. of foreign parent company. So the name is details of foreign equity and debt interest, including any beneficial interest at any in any entity at any time during the calendar year ending as on 31st December 2024. And the information required is country name, country code, name of entity, you can mention company name, address of entity, zip, nature of entity, you can mention equity capital, nature of entity, date of acquiring the interest. So the first date when you acquire that particular equity holding, initial value of investment, peak value, closing value, and total amount paid credited with respect to the holding during the year, total gross proceeds from sale or redemption of investment during the period. So any ESOP, RSU, any investment through apps like IndMoney, Vesting Finance, etc. has to be reported in A3 if it is an equity investment or debt interest, including any beneficial interest. So date of acquiring interest is okay. Initial value of investment is the not the opening investment as on this calendar year. It has to be the initial value of investment for your date of investment when you invested this particular amount. Peak value has to be of this particular calendar year. Closing value is again of 31st December. So we have taken an example. Mr. Sachin has purchased shares of Tesla, US based company. The following are the details of securities. Country name is USA. Name of entity, you can mention company name, which is Tesla in this case. Address is USA. Date of acquiring interest is the first date when you acquired this particular interest. Not, it may not be of this particular calendar year. In this case, is of 2017. Initial value of investment is the first investment when you invested this in this company. In this case, it is 1116 INR, which is converted value. Peak value during the year can be of any day of this particular calendar year. In this case, it is 39,000. Closing value we have mentioned 38,000 because there is some redemption in this particular account. Gross amount paid credited is 2500, and that's gross proceeds from sale or redemption is 1560 only. So gross amount paid credited can be of dividend, and last one is gross proceeds from sale or redemption. So we have assumed that he has sold one particular share for 1560 rupees, the cost of which was 1200 only. So we have reduced closing value by 1200 rupees. So closing value will be 38,000 only. So how it will be filled is country name, name of entity, you can mention company name, address USA, nature of entity, you can mention company equity. There is no drop down here. Date of acquiring interest is 2017. Initial value is the initial value. It may be of previous years or previous calendar year. Peak value we have discussed. Closing value will be 39,200 minus 1200. Total amount paid credited is your maybe your dividend income, and gross redemption amount is 1560 only. So in this manner, table A3 is filled, and we have taken a critical issue also to discuss it. Mr. AK, an employee of an Indian subsidiary, was granted ESOP of its overseas holding company, which is XYZ Inc. The ESOP schedule is given below. So in the ESOP, we have generally three kind of period or dates. First is granting, second is vesting, third is exercise. So on granting, employees generally informed and uh, given a right that some shares will be given to him on a particular date in future, subject to certain conditions that he will be associated with the company on that particular date. And then on that particular date, the shares are vested, and then on his exercise, the shares are ultimately allotted to him. So there is a confusion in industry that whether vesting has to be reported or exercise has to be reported. So we have tried to answer this out. uh, Reporting under schedule FA: granted but not vested, vested but yet not exercised. So in our view, on granting, no reporting is required to be made in schedule FA, because at this particular date the employee has only a contingent right. He may or may not be associated at that particular time. So at the time of granting, no FA schedule is required to be filled. And then on vesting, uh, he has given the right, and then he has to exercise, but he has not yet exercised the ESOPs. So, as per our view, vesting on the vesting also, FA schedule is not required to be filled. However, taking a conservative approach, he or she can voluntarily disclose vested ESOPs or RSU in schedule FA, especially when the amount is significant and the person is at higher designation, just to take a very conservative approach.
Thank you, Deepak. I think again, but A3 table, please note, is the most critical table to be filled in. We have taken the examples of ESOPs and RSUs because ESOP is the one where we actually miss reporting or we don't report. But otherwise, a lot of our clients, this is the table which we actually fill up. Any kind of equity that you have taken up in an entity outside India is to be reported. Somebody has, say, invested as a promoter or as an investor in, say, a LLC in UAE. That also needs to be reported. We have bought some bonds or some kind of a debt instrument that is to be reported. Okay, and how it is to be reported? The table we have already discussed. So actually, we should A3. Okay, and again, this has 13 columns. Remember to read the title very carefully. The title here is Details of Foreign Equity and Debt Interest Held. including any beneficial interest in any entity during the any time during the calendar year which is ending on say 31st December 2024. ऊपर लेके जाओ. And first column is serial number. Ensure that why serial number is given. You may have investment in multiple entities. You may have investment in debts. You may have investment in, just as an investor. So serial number wise, they are to be filled up. Okay. And other important point here is that again, this is not a foreign source income schedule. Not at all. So all the 13 columns, it has to be filled up by all the owners, be it owner or a beneficial owner or the beneficiary. And you don't have to worry that it may be picked up by the department that you have not disclosed the income, because this is not a foreign source income table. Foreign source, we are going to talk about it later. It is only a disclosure. This table is only about disclosure. Every owner, every beneficiary, every beneficial owner has to fill in all the 13 columns. This is one. Another very important point to be noted in this particular case is that, of course, the example which was taken, the peak balance was about a listed entity. But if you have invested in an unlisted entity, maybe you may not be aware about the peak balance. So your investment value would also be the peak balance, because that of late has happened very frequently. We are practically dealing with many, many such cases where people have started investing in overseas countries like UAE, like US, so in unlisted. So that again, the peak balance, you should not get confused that any kind of a valuation is to be done for unlisted entities. Again, as Deepak rightly mentioned, that there are two columns, 12 and 13. Column 12 was the total gross amount paid credited with respect to the holding during the period. So it is only with regard to your holding for any investment you have done, or any exemption or any kind of redemption you have done. So that value is to be identified separately, because in the TIES or FATCA or in different reporting formats, that information is now available. And column 13 is about the gross proceeds from the sale or redemption, just understand it very carefully, during the calendar year. And again, I am repeating myself, everybody has to fill in all these 30. One last point, which again is extremely important in this case, and I'll cover ESOP once again in brief, that in today's economic times, I'm sure a lot of you would have noted, it is a first page news that department has sent notices to the companies now, multinational companies. It was a front page news wherein the companies are requested to educate their employees who have been allotted or who are part of the ESOP schemes. And companies have to inform their employees that a fee schedule is to be filled up, even with regard to the ESOPs, RSUs, SARs that have been allotted to them. So look at the way department is now moving. And why are we doing it today on 22nd? Because we have time till 31st December to revise, in case FA schedule or FSI schedule has not been filled up properly, to revise our tax return for the financial year of 2024-25. So this is what the importance is. And one last point in ESOP, as Deepak rightly mentioned, that what is to be reported. So ESOP only when you have the right to exercise. That is when you have the right to transfer, you have the right to sell, you have the right to trade, you actually become the owner. So only when part 3, that is the exercise happens, A3 table reporting will happen. Vesting, as he rightly mentioned, maybe you don't have the right, it's not transferable, you actually are not the owner as on date. It may be reported elsewhere in another table. But on the conservative side, we do report about the vesting as well. So very nicely explained, Deepak, and I request you to please take us through table A4. Teacher.
Thank you, sir. So, just as sir added that in case vested investment is to be reported, generally it is not required to be reported in A3. There are other tables where it can be reported. So, one of which is table A4. Table A4 is reporting of foreign cash value of insurance contracts or annuity contracts. And the details are country name, country code, financial institution in which insurance contract held, address of financial institution, zip code, date of contract, cash value or surrender value of the contract, total gross amount paid credited with respect of the contract during the period. So I'll give a very brief background of this particular table. So with effect from assessment year 1920, this table has been introduced in Schedule FA. Earlier it was not there. So now, even if you don't have any foreign asset or foreign income, and you are just a nominee of any insurance policy taken by a relative overseas, then also you are required to fill this particular table and your FA schedule. So, name of financial institution can be from the can be the name from which you have taken this insurance. Address can also be taken from that financial institution. Zip code, date of contract will be your contract date, like your policy commencement date. Cash value or surrender value, any value can be filled, whatever is available with you. Total gross amount paid credited with respect to the contract during the period. So there is a common confusion that whether premium amount paid has to be filled in this particular cell, or if any amount has been received from the uh, insurance company has to be filled. So in our view, only if the amount has been received, because it has been mentioned that total amount paid credited is to be reported. So in our view, only if any amount has been received from the insurance company has to be reported here. Again, for this particular table, definitions are given in Rule 114F. Again, I'll read out first definition only, which is insurance contract. It is a contract under which the insurer agrees to pay an amount upon the occurrence of a specified contingency involving mortality, mobility, accident, liability, or property risk. So this is like any other insurance account we take in India. So if any overseas insurance policy has been taken by the person insured, it has to be reported by him also, or if you are a nominee in that particular policy, then you are also required to report this in your particular table of Schedule FA. So surrender value is the actual amount that you will be receiving if you cancel the policy early. So department has given both the options. If you have cash value, you can mention cash value. If you have surrender value, you can mention surrender value. We have also taken one example to understand this particular table. Mrs. Priyanka invests USD 2,500 on a monthly basis for a foreign insurance policy, and the surrender value of this life insurance contract is 99 lakh 94,500. So this is again converted value, and the particulars of this insurance are given here. Country name France, name of financial institution can be AXA Group, address will be of France, date of contract is the date on which your policy commenced, surrender value is the converted value, it is always mentioned in your policy, or otherwise you can take it from your insurance company also. Total gross amount paid credited we have mentioned here 0. So how to fill this table A4 is country name France, name of financial institution is the name of your insurance company, address is France, date of contract is your policy commencement date, cash value or surrender value, like in this case we have surrender value, we have mentioned this, and total gross amount paid is nothing because this is not surrendered during the year. Yeah.
Thank you, Deepak. Thank you again. And I would like to, take a practical example here. One of our clients, a US person, he was getting annuity from US, and this was never disclosed as his foreign assets in his tax returns. So he got a notice from the tax department that you have been reporting your annuity income from US. Why it is not reported in the FA schedule? And we came to know about it, and of course, we wrote to the AO that income is anyways disclosed, and it was an inadvertent error, and in fact, it was, because I guess we never understood that. So, reporting of the insurance contracts and as well as the annuity contracts, they are to be disclosed. And again, practically we have a lot of people, who have come back to India, maybe carrying some kind of a insurance or a annuity there. So those are to be reported. Another very practical point that we noted, that somebody had a term insurance, like we have term insurance in India, which has no redemption value. It has no surrender value. It is only continuing till your specified age. Even those are to be reported. Not that there would be any beneficial or a surrender value that you are going to realize, but that reporting has to happen. Okay, so these were two very, very practical points that we faced recently. So thank you, Deepak, and maybe I request you to take up table B before we move to Jatin.
So we are now in table B. Table B is reporting of financial interest in any entity held. So this is a kind of residual investment table, like whatever is not mentioned in table A3, which we discussed, is equity and debt interest, has to be reported in reporting of financial interest in any entity held. Uh, in this table, the information asked is country name, zip code, nature of entity, name and address of the entity, nature of interest. So in this particular table, again you have to select, and from the drop down options, that is your interest is direct, beneficial owner, or is of beneficiary, and the date since held, total investment at cost, income accrued from such interest, nature of income, and then some new information is asked is which was not there in previous tables, is income taxable and offered in this return. So we have taken example. So apart from equity investment, if any kind of interest in any entity, like we have taken example of a partnership firm, Mr. Sandeep Kumar has formed a partnership firm in Singapore, and he invested approximately 13 lakhs as capital as on 30th April. During the calendar year, that is this particular calendar year 2024,
हाँ,
income
वो भी हम बात
earned
करेंगे इसी
from
पे.
the firm is approximately 2 lakhs, which is converted value. Further, during the financial year 2024, so here income is asked in calendar year also and in financial year also. During the financial year 2024-25, income earned from the firm by Mr. Sandeep is approximately 1.667 lakhs. So how disclosure will be made? He will mention country name Singapore, name of entity he can mention, nature of entity is partnership firm, name of the entity we have taken example as Kumar Investment, address will be of Singapore, nature of interest can be between direct beneficial owner or beneficiary, in this case is on owner, so we have taken direct. Date since held is 2010. Total investment will always be at cost, which is 13 lakhs. Income accrued from such interest. So I am repeating, income accrued means the calendar year, January to December, if any income is received by him from this particular firm, in this case it is 2.67 lakhs. Nature of income will be profit from business. Then additional information is income taxable and offered in this return. Now you have to see what income you have shown in your computation from this particular firm. In this case, it is 1.67 lakhs, which is pertaining to the financial year 2024-25, and schedule where offered will be of business schedule. So these are some additional information which the department asked from table B, is nature of income, income taxable and offered in this return. So since it is mentioned in this return, so you have to see as per financial year.
Yeah. Thank you, Deepak. Thank you very much. I missed one point in the previous schedule, which was A4, wherein we talked about insurance and annuity. Please remember that it also covers any kind of retirement benefit. Like in India, we have the provident funds. So similarly, there are funds which may be in the nature of annuity or the retirement funds. They also are to be reported in table A4. And as Sir just pointed out, that quite often we miss reporting those funds. Okay, so A4. And now, as far as table B is concerned, so table A1 to A4, they are applicable to everyone. Whosoever is the owner, they will have to fill in all the information. But department very intelligently they have changed now the names from table B to G. So B to G, please remember, they are now they also talk about the FSI. So up to A4, no FSI, complete reporting. And A4, as I mentioned, it also includes any retiral or PF. So table B is about reporting of financial interest in any entity. At times we also include the vesting of shares in this, Deepak.
Yes, yes,
Yeah,
yes.
so vesting of shares, which we said on a conservative basis, may be included here. Or if there is anything in the nature of debt equity which is not reported earlier, may be reported here. Now, the important points, again, as far as this is concerned, yeah, so table B up to serial number 1 to 9 is to be filled by all. 1 to 9 is to be filled by all. The owner, beneficial owner, or the beneficiary. The distinguishing point here is column 10, 11, and 12. So, column 10 says income which is taxable and offered in the return. We have to mention the amount here. Again, column 11 talks about schedule where it is offered, which we are going to talk later. That reference to that schedule is to be mentioned. And item number of the schedule, which again we'll refer. So 10, 11, and 12, they are the distinguishing columns starting from table B. Why they are distinguishing? That maybe husband has invested, or he is actually the beneficial owner, or he is the one who's deriving the benefit out of it. He might have declared the entire income, he might have declared or claimed the entire tax credit. So maybe in the joint owner's name or the beneficiary's name, this 10, 11, and 12 may not be applicable. So remember 1 to 9, again without any confusion, to be reported. Now, as we are starting with FSI, column 10, 11, and 12, and henceforth, the last three columns will only be reported by the one who has actually declared it in the tax return. Okay, so this is something very important. And again, one very important point that he mentioned, as far as table B is concerned, that it is more about your investment, more about your interest in any entity which is outside India. And what is to be reported is the investments during the year and the incomes earned during the calendar year. Okay, this is to be reported by all the owners. And the last three columns will take care of the FSI. So this is what it is as far as table B is concerned. So now let's move to the reporting of immovable properties. And I'll request CA Jatin Sapra. CA Jatin Sapra recently qualified. He is also an expert in direct taxes and the transfer pricing matter. And actually, he is the ground man on FA and whatever we are discussing today. He is the one, who brings in a lot of questions and also provides solutions at times. And I would be very happy for Jatin to talk about table C, reporting of immovable properties held outside.
So thank you, Jay sir, for the kind introduction. So let's now talk about table C, which, as Jaisar told, talks about details of immovable property which is held at any time during the calendar year ended 31st December. So, what all details are need to be filled in this table are first, column 2A. It talks about the country name and country code. So basically, there is a drop down. You can just simply select the country. Let's say the country is US. You can just simply select it, and automatically code will appear. So column 2B talks about column 2B and column 3 talks about the address and zip code of the property. You can accordingly write that. So column 4 talks about the ownership, which, as Deepak sir has very well explained, that there are three options there: direct, who has the legal title to that asset; beneficial owner, who has provided the consideration for either the benefit of himself or for others; and finally the beneficiary, who for whose benefit the asset has been made. Finally, there is column 5, which talks about the date of acquisition. So, whenever you have purchased an immovable property, you can just simply write the date of acquisition under the column 5. Then comes column 6, which talks about total investments, and in bracket, it is specifically mentioned that it has to be reported at cost and in rupees. So the important point to note is that since you have an immovable property outside India, so you might be paying in their respective currency. So let's say you have invested $1 million in the year 2015, and at that time the US dollar was at, let's say, 50-55. So that currency rate needs to be mentioned or to be calculated for INR amount rather than today's rate, which may be different, like 1991. And finally, there is income. There is column 7, income derived from that property. So usually, in case of an immovable property, there is rental income. So the income that has been derived, you can just simply write down the amount of rental income. So under column 7, as Jaisar has already explained, so this would be the calendar year income. So from January to December, the calendar year income needs to be reported under column 7. And finally, there is column 8, which talks about the nature of income. So, generally or usually, I would say, in case of an immovable property, so income is from rental income. So, you can just simply write rental income under column 8. So, column 9 to column 11 is of income which is taxable and offered to tax in this return. So this would be mapped with the computation of income that is prepared. So the amount which is mentioned under column 9 is financial year wise. So there is a possibility that the income which is reported under column 7 and under 9 may be different, since the period are entirely different. So once you have written down the amount that is taxable under this return, then there is column 10, which talks about the schedule where it is offered. So since you have already offered to tax this income in your income tax return, you can just, before filing the return, you can just take out the draft form and just check that under which schedule exactly it is being reported, and then you can just simply write down that schedule. Like in this case, this might be income from house property, and you can just simply write that, and accordingly the item number can be checked from that form and can be filled. So this is basically a screen clipping of the schedule FA table 6, which we have taken from ITR form. So now let us understand with the help of an example. So let's say Mr. X purchased a residential flat in Canada in December 2016 for a consideration of, let's say, 9 lakh Canadian dollars. So the TPVR rate in the year 2016 needs to be taken, though currently the rate is roughly 65, 66. But since the person has purchased the property in the year 2016, and at that time the rate was 50, so that rate would be taken. And let's say during the calendar year he has earned a rental income of 2 lakh rupees a month. So how the reporting has to be done? So firstly, serial number, country name, you can just simply write Canada, and address, complete address needs to be mentioned. Then ownership, if the person has the legal title to that asset, if his name is written in that document papers, you can just simply select the drop down direct. And then the date of acquisition can be mentioned December 2016. Total investment we have already talked about that it would be 4.5 CR. And income derived from the property, which is the column 7. Under this column, we need to mention the calendar year income from January to December, which is since 2 lakh rupees per month, yearly would be 24 lakh rupees. Nature of income can simply be rental income. And now column last three columns, as we have already discussed, are related to the income tax return which is filed for the financial year wise. So here the income that would be disclosed would be the financial year income. Since in our example which we have already taken 2 lakh rupees a month, irrespective of whether it is calendar year or financial year, but there is a possibility that the income which is disclosed under column 7 and disclosed under column 9 might be different. So this 24 lakh rupees would be mapped with the computation of income which is filed. Finally, the schedule can be mentioned, which would be usually from house property, and the item number can be mentioned. So this was an example for you to understand how the reporting has to be done. So we have currently taken two critical issues to discuss it in detail. So let's say there's a father who has owned a property in US and he has now transferred that property to his son as a successor. So the question arises that when the son will be filing his return of income, so the what would be the date of acquisition of the property? Whether it would be the date at which the father has originally acquired that asset or the date at which he was transferred that asset. So the answer to that would be the original date at which his father has acquired that asset needs to be mentioned. So we have taken another example which is usually very common in India, that generally the spouses purchase the property together and both of their in both of their name of husband and wife together. So the question arises that how the reporting has to be done, whether it has to be reported only through husband or through wife. So the answer to that would be both of the spouses needs to declare that in their respective schedule FA.
Thank you, Jatin. I think very well taken. Again, I'm repeating myself continuously. Table B, you have to remember, huh? Up to table A4, reporting by all same numbers. Table B, we noted that right from column 1 to 9, if there are multiple owners, beneficiaries, beneficial, they have to report. But column 10 onwards, where only one person has reported the income in the tax return. So in this particular case, 9, 10, and 11. So the primary owner, the person who has invested, might have declared the entire income. So the secondary or the joint owner will have to fill up only till nature of income. But from 9, 10, and 11, it would only be the primary person who has declared the income in his tax return for the financial year will declare it, not the joint owner. Okay, so this is one very important. One point I think which I missed, and Sir reminded me, that in case we have advanced some money towards purchase of property, where would that be reported? So somebody has already given the advance for purchase of property, so that gets reported in table number A3, which talks about any foreign equity, debt, any other capital asset.
We'll be covering that in later part of the slide.
Table G.
G. Okay, so we'll talk about it. That where would the advance be covered? So that I think gets covered
Under table
in
D.
some other table. Okay, and one last point. Of course, in the example we have taken that the original date of acquisition by father. This is more true from Indian perspective. OECD of 2025, which has come out with some changes, uh, there could be a case like in US. There is a case that in case it's an American property, father transfers it to the son who is an Indian. At that time itself, it is subjected to a kind of a capital gain tax. So it depends on the jurisdiction to jurisdiction basis. Of course, OECD has more covered about few countries. So we have to be careful that whether it has been subjected to capital gain at the time of transfer or not. Okay. And one last point is about the DTAA. Most of the double taxation avoidance agreements, they talk about the taxability arising from the house property income, either in the form of rental or sale. It the primary right of taxation is with the country where the property is held. So you have to keep it in mind while we are doing the FSI schedule on this. So this is what it is, and I would again request Jatin to take us through the reporting of any other capital asset. So maybe the advance gets covered here. So table D, reporting of any other capital asset, if you could talk about it.
Yes. So table D, as sir told, talks about details of any other capital asset at any time during the calendar year ended 31st of December. So what is the meaning of any other asset? So if it is not covered under any of the previous tables, A to A1 to A4, B or C, then it would be specifically covered under this table D, which would be any other capital asset. So firstly, we'll understand what reporting needs to be done in this specific table. So first, there would be serial number. Then column 2A talks about country name. Again, there would be a drop down. You can just simply select the country. And column 2B talks about the zip code. You can just simply write down the zip code. And then nature of the asset. So it is, since it is any other capital asset, so they have specifically included the nature of the asset, so that you can simply just write down what exactly asset you are covering under this table. So column 4 talks about ownership. Either you are the direct owner or the beneficial owner or the beneficiary. You can just simply select through the drop down. Then the date of acquisition of that other capital asset needs to be mentioned. Again, under column 6, total investment at cost and in rupees needs to be mentioned of the date, from the date on which you have already purchased. Then comes column 7, which talks about income derived from the asset. So the income derived again here would be of the calendar year of which you are filing the return. So any income that has been derived in INR, you have to state in this column. Then comes column 8, which talks about the nature of income. It could be either interest, dividend, or any other income which is not covered before. Then column 9 to column 11 again covers the income which is taxable and offered to tax in this return. So it would be financial year wise. So column 9 would again require the amount that needs to be filled, which is earned and offered to tax in this return, and it would again be mapped with the computation of income. Again, the schedule wherein you have offered this return, if it is, let's say it is covered under the schedule of other sources, you can just simply write other sources, and the item number can be traced from the ITR form, and then you can just simply write down either 1 2 3. So these are the details which needs to be mentioned. So now let us take an example to understand it better. So let's say there is an investor who has invested in ETF, which is exchange traded funds, in the US stock market in the year October 2007, and they have invested roughly INR 2 lakh rupees in that ETF, and during the calendar year and financial year they have respectively earned 3400 and 2500 rupees INR income. So how the reporting has to be done? So firstly, country name, you can just simply write US, the code will appear. Complete address needs to be mentioned. And the ownership, if you are directly the owner of that asset, you can just simply select the drop down as direct, and the date of acquisition can be mentioned. Then the total investment which was initially made needs to be mentioned, which in our case was INR 2 lakh rupees. Then comes the income which is derived from that property. So as I told you before, that under this column 7, the amount that would be covered would be the calendar year income that has been earned. So in our case, we have already discussed that during the calendar year they have earned an income of rupees 3400 and during the financial year 2500. So that is the reason we have mentioned 3400 under column 7 income derived. And finally, the nature of income, since it is derived from ETF, it is dividend income, and we have mentioned the nature of income as dividend income. Finally, there are last three columns which I already told before that this would require disclosure financial year wise. So as I discussed earlier, she has earned income of rupees 2500 during that financial year. So we have written 2500 and the schedule was of other sources and the respective item number can be mentioned. So another example which Jay sir and sir were discussing was that let's say a person has invested into an immovable property, but the ownership has not yet been transferred. Then how the reporting has to be done? Whether it has to be done under table C or table D. So currently the person do not have the property, immovable property in his or her name. So we cannot just specify or disclose under table C. So it can squarely be covered under table D, any other capital asset if in case any advances are given. And once it is registered in his or her name, then we can just simply report it under table C. So the example 2 is of that only, that during the calendar year 24, a person has made advance payment for the purchase of a residential apartment and to some builder, ABC builder in London, UK. The payment was made in July 24, roughly of GBP 40,000. Taking 105 as the exchange rate, INR amount was 42 lakh rupees. So the ownership status is that the ownership is not yet transferred. So hence that property cannot be called as an immovable property. That is just a right to that person. That he has the right to that asset, but that asset is not in his name. So that is the reason we can report it under column D and treat it as a capital asset or any other capital asset. And once in the future reporting of that would be once it is in the name or the ownership is transferred in his or her name, then it can be shifted to table C and can be reported there and not in table D.
Yeah, Jatin, I think you explained it very nicely. So, table D, as the title says, that it is reporting of any other capital asset. Okay, and I think everything's same. I'm again, but right from table B, we have to remember that income which is offered to taxation in India is for the financial year, whereas income earned, which is as per column 7, from the period or from the asset during the period is for the calendar year. So the figures could be different. Like in this particular example, for the calendar year, the income earned was 3,400, so which is from January to December, whereas the taxable income was only 2,500. Okay, so just keep in mind that figures could be different. And in this particular schedule, up to column 8, 1 to 8, everybody, the owners, joint owners, they will have to fill in the same information. 9, 10, and 11, say in this example, the income earned is 2,500, and two persons have reported, the husband and the wife, 1250 each per month in their tax return. So, serial number, each owner will fill in what they have offered. So say in this particular example, 1250 per month by husband. So he will only report under 9, 10, 11 what he has offered, and the wife in her return will again mention under column 9, 10, and 11 her share of income which she has reported. So the point which I'm trying to make is that up to a certain columns, same information, but as soon as the foreign source incomes are concerned, the figures may be different. Yeah. So this is to be kept in mind. And Jatin rightly talked about the advance which are paid for residential properties. And again, a lot of practical uh, points that we are noting. A lot of clients are now, say for example, in the countries like UAE and to a larger extent some Middle East countries as well, wherein you deposit certain amount, and over a period of 3 years or so, the property will be handed over. So they are considered as advance against the property, wherein we are reporting it under other capital assets. So it may be through LRS or otherwise that we are remitting the amount. So otherwise, I think this is a simple one, and I would again request, talking about a very very important table. Again, a lot of practical issues we face here, and when I'm concluding, I'll talk about that practical issue, the reporting of accounts in which you have signing authority, and also a practical case which had come up recently, but I'll talk about it. And Jatin, if you could take us through table E.
So, Table E talks about the details of the account in which you have a signing authority held at any time during the calendar year ended 31st December, and which has not been included under table A to D above. So, what is the reason why here it is specifically mentioned that why that which has not been included under table A to D above? Let's say I have a bank account in US, and I have that account and I am the signing authority as well. So I might be reporting it under table A1. So if I have already reported it under table A1, then no duplicacy or no another reporting under table E is required. So this has to be filled only in case you are the signing authority, and that has not already been reported under table A to table D above. So what all details need to be mentioned under this are, so under column 2A, name of the institution, basically the bank account needs to be mentioned. So under column 2B, the address of that bank or institution needs to be mentioned. 3A talks about the country. Again, there would be a drop down. You can just simply select. 3B talks about zip code, and 4 talks about name of the account holder. So as I talked about, since that person is just a signing authority, so there is a possibility that the account might be in someone else's name. So that person's name needs to be mentioned under column 4. Then column 5 talks about account number, which can be written. Then 6 talks about either the peak balance or the investment that has been made during the year in INR, that can be mentioned. And 7 talks about whether any income which is accrued taxable in your hand. So if that person, so what happens usually is that if that person is just a signing authority, so the person who is the main account holder, whose name is mentioned under column 4, that person would be reporting that income in his or her return. So generally the answer to column number 7 is that it is mentioned that no, that the income which is accrued is not taxable in my hands. And once you write down this no in under column 7, then from column 8 to 11, basically that comes as NA, that is not applicable. So let us now understand it with the help of an example. Let's say there is a person who has a bank account with the DBS in Singapore, and he has opened that account in the year 2023, and he has kept his wife as a signing authority to that account. So we have the details about the peak balances and the interest earned in the calendar or the financial year. So now the question arises that whether the husband or the wife who needs to report that bank account in the return of income or in the specifically in the schedule FA. So the answer to that is the husband, who is actually the owner of that account, needs to mention that account in his schedule FA under table A1 as a depository account, which Deepak sir has already told us before. and wife again needs to mention that account under her return of income under this table E, wherein, so how the reporting has to be done, we have just have a practical example of that. So, firstly, the country name Singapore, the name of the institution, DBS Bank can be mentioned, the complete address. Now, the name of the account holder, Mr. Gulati, in our case was Mr. Gulati, that can be mentioned. And then the account number and peak balance can be written. And now the question that whether the income that was accrued is taxable in your hand, then the spouse can simply write it as no, it is not taxable in her hand, since Mr. Gulati might have filed his return and reported that in his return of income under the Schedule FA, Table A1.
Thank you, Jatin. I think it is more about the signing partner, the person having the signing authority that needs to be mentioned. Considering the time, we are just jumping to Schedule F and Schedule G. And again, Jatin, I would request you to please take up the schedules. Schedule F, which is the reporting of trust, which are created under the respective laws of the country, and Schedule Table G, which will talk about any other income derived from any other source which are outside India. So, Jatin, if you could take us through Schedule F first.
So, Table F talks about reporting of the trust which is created under the laws of the country outside India, in which the person is either a trustee, a beneficiary, or a settler. So, just to understand it better, a settler means a person who has created a trust, who has transferred his assets to the trust. Beneficiary is the person for whose ultimate benefit the trust is created. And the trustee is the person who basically administers that trust on the basis of all the terms and conditions that has been specified. So what details needs to be mentioned under this table is, so table column 2A and 2B talks about the country name and the zip code. 3 talks about the name and the address of that trust, which can be written. Then table 4, column 4, 5 and 6 talks about name and address of the trustee, settler and beneficiary. So you can just simply write down their names and the addresses. 7 talks about the date since this position, be it trustee, settler or beneficiary, is held. And 8 talks about whether this income derived is taxable in their hands. So that income of that calendar year needs to be mentioned for that each respective trustee, settler or beneficiary. And then column 10 to 12 again talks about if the income is offered to tax in this return, then the amount, again the financial year wise amount needs to be mentioned, the schedule wherein it has been offered, and finally the item number of that schedule needs to be mentioned. So to help in understand it in better terms, we have created an example wherein there is a trust, say Mehta Family Trust, wherein Mr. Rahul Mehta has made that trust, and he has created that trust in foreign jurisdiction UK in the year April 2019 under the laws of UK, and he has made his son Mr. Sahil as the beneficiary. So Mr. Rahul, since he has created the trust, he became a settler at that time, and he has created himself as a trustee as well. So he is basically responsible for the administrative functions as well. And during that year, we have considered that there is no income derived from that trust. So how reporting has to be done, keeping this example in mind? So firstly, the name of the country, UK, can be mentioned. The name and the address of the trust can simply be mentioned, Mehta Family Trust, UK. So since Mr. Rahul was the trustee and the settler as well, so you can just simply write down his name and the complete address detail under this specific columns. Finally, the column that is of beneficiary, since his son Mr. Sahil was the beneficiary of that trust, so you can just simply write his name and the address and the date of position in which they have held that position that can be mentioned, which in our case was April 2019, and whether it was taxable in your hands or not. Since in this case there was no income, we have simply mentioned no, and the rest of the columns would be that of NA.
Yeah, thank you, Jatin. Two, I think, couple of points we missed. One, that it is only about the foreign assets, not the liabilities. So, in case there is a borrowing or there is any kind of a liability incurred, liability. So, liability again, we have to go by the definition as being given in our Companies Act, or you can always refer to DTAA. But in case any asset has a negative balance, say our bank account has a negative balance, the closing balance, that needs to be disclosed because it is a asset having a negative balance due to maybe overdrafting. In case you have a demat account overseas and because of the charges or because of some purchase, the sufficient bank balance is not there to meet the outstanding, even the negative demat account balance is to be mentioned because demat per se is a asset. Okay, so these points we need to remember, that don't get confused if there is a negative balance, though it is only about foreign assets. Yeah? So Jatin, if you could take us through the final table, which is table number G.
So, table G talks about details of any other income which is derived from any source outside India. So, earlier we were talking about from table A1 to table E, wherein we have taken the details of the asset, but this is a specific table which covers only about the other income which is derived from any source outside India. So the important points to be kept in mind is first, that income is not included in any of the above tables, which was table A to F, and that income is not from the head PGVP. So what all details needs to be mentioned in this respective table is column 2A and 2B, again the name of the country and the zip code needs to be mentioned. 3 is a specific column wherein the name and address of the person from whom that income is derived needs to be mentioned. Fourth talks about the income which is derived. Again, the calendar year income needs to be mentioned over here. And fifth talks about the nature of income, be it other sources, salary, or whatever kind of income is has been earned needs to be mentioned here. The nature of income needs to be mentioned here. And column 6 talks about whether taxable in your hands. Usually the answer to this is yes. If yes, then column 7 to 9 comes under play, wherein that income has been offered to tax in this return, then the amount, the relevant schedule, and again the item number needs to be mentioned under these columns. So we can understand it better with the help of an example. Let's say there is a taxpayer who is a freelancer and he provides tax related consultancy services to his clients. So he has one of the client in Australia to whom he has provided tax related consultancy services, and during the calendar year he has earned INR 12.5 lakh rupees, and for financial year it is 10.5 lakh rupees. So how it has to be reported under column G, under table G. So simply the name of the country can be mentioned, the name and address of the person from whom that income is derived. Like in our case is Nadia, and she's from Australia, that needs to be mentioned. Then the income derived in the calendar year, which in our case calendar year income was 12.5 lakh, which we have mentioned here, and the nature of income is other sources. And since that income is taxable in his hands, so the income which is derived, again it would be of the financial year income, which is 10.5 lakh, which can be mentioned over here, and the schedule wherein he has offered to tax this in his return can be mentioned. Like in this case, since it was from other sources, so we have mentioned IFOS, and the relevant item number can be mentioned. So another biggest example that I can take is that let's say there is a content creator or a YouTuber who creates content and do not have any kind of asset outside India. So that creator is getting income either, let's say, from YouTube or from Meta, can report that income under this table.
Yeah, I think Jatin very well covered. So table G, just look at the title. It is about details of any other income, not about asset. It is about income which is derived from any source outside India. So it may not really be linked to the assets which we have been talking about, in the earlier tables. So as an example, a lot of the social media content creators, they may be getting income from outside. There could be people like us rendering services outside India. So reporting also has to happen in this along with our foreign source incomes. So again, when we are filling up table G, we forget that we have filled up form FSI, but somewhere table G is to be filled up. And again, I'm sure by 3:30, a lot of us may be getting bored or exhaustive. So give yourself. Nobody would be listening a big round of applause, and even we are going to give it to you. Okay, and give yourself a big smile because now we have another very and the last important schedule, which is foreign source income. And also our sir is going to take us an overview, and we have some very beautiful questions from your side which we are going to answer, and just be with us for last 20 minutes. Schedule foreign source income. So right from table B to G, not A1 to A4, B to G, there are last three columns which talk about whether you have reported any income in your FSI. So all those things, all those incomes, they get covered under schedule FSI, foreign source income, and our very able speaker Jatin is going to take us through. Jatin.
So, schedule FSI, as Jaisal already told, is about foreign source income. So, we'll firstly talk about what details needs to be covered. So, detail of income from outside India and tax relief is taken, needs to be mentioned in the schedule FSI. So once you are done with schedule FA, you need to fill schedule FSI. So firstly, we talk about how it has to be filled. So the first drop down is about the country code. So let us first understand that it has to be filled country wise. So let's say I have an income from a country, let's say US. First, I'll select the drop down of the country code as US. Then we have to mention the TIN number. So TIN number, as in India we have a unique number allotted to us by the government, which is PAN. So TIN number is a unique number which is given by the country, with the government of the respective country, a unique number to the taxpayers. That needs to be mentioned under this column. Then comes, so for each of the country, all the five heads are there: salary, HP, PGBP, cap gains, and other sources. So whatever income that the person has earned during that year needs to be mentioned. Also, not to forget that till this time we were talking about schedule FA, wherein importance was given to the period which was calendar year. The most important thing, or the most unique thing about schedule FSI is that herein the details needs to be filled as per the financial year. So don't get confused between schedule FA and schedule FSI. FA talks about calendar year and FSI specifically talks about the financial year wise income. Why am I stressing upon on this is that under this column B, it is specifically mentioned that income from outside India, which is included in Part B TI. So Part B TI is basically total income schedule, which is there in the ITR form. So that is mapped with this schedule FSI. So if in case different amounts are mentioned in FSI and in the return of income, it may get triggered. So after writing down the income that has been earned from outside India, then the taxes, if any, which are paid outside India needs to be mentioned. Let's say I have an income from US, then I can and any taxes has been deducted in that particular jurisdiction, then that amount can be mentioned over here in this column C. After that, the tax which is payable on the same income under the normal provisions in India needs to be mentioned under column D. So under column E, obviously the lower of the that of the column C or column D would be given as a tax relief to the taxpayer. Let's say 25% tax was deducted on dividend income in US, and the effective tax rate on that particular income in India was roughly, let's say, 20%. So the lower of that 20% would be given as the benefit under column E. And finally, if that taxpayer is claiming any relief under section 90, 90A as per the DTAA, that needs to be mentioned under this column F. So this is the detail which under the serial 1 has to be filled country wise, and if in case that person has income from another country, so again the same step needs to be followed and all the details needs to be filled country wise.
Thank you, Jatin. I think Schedule FSI is something very, very important for all of us to understand. And the best part is this schedule has two serial numbers. One is serial number indicating the country from where we have derived the income, and tax identification number in case it is not allotted, put in your passport number that is equivalent to the tax identification. Then another serial number starts. Jatin, if you could take to the form. It identifies the sources of income as we have in the Indian Income Tax Act: the salary income, house property income, business or professional income, capital gains, and other sources. And I'm sure you would relate it to Table B, to Table G. All those figures that we have reported will flow to this particular schedule, which is FSI schedule. So up to A and B, they are simple. A is identified, B you have to mention from what we have discussed. Now, what is very important here is C and D. And of course, income tax has been very, very, they have done it so nicely that even if we are not too aware about the DTAA, in the schedule itself, they have defined, what kind of benefit is available. So under column D, in fact, under column C, it is the tax which you have paid on the incomes like salary, house property, or capital gains outside India that needs to be mentioned. And under column D, whatever is your effective tax rate, it could be 30%, it could be 20%, or whatever. So that rate into the income is to be calculated and mentioned under D. Okay. And then E says, because India's DTAA are so framed that only the lower of the two will be allowed. So automatically C or D, whichever is lower, is the tax relief which is available to us. And in case we are aware about the DTAA, do mention about the article, which is generally Article 23, or if it is you are claiming any benefit under section 91 unilateral, that also can be mentioned here. So overall the concept under FA is that even department has put in a lot of efforts to make it very, very simple and understandable. Another point which is very, very important here is that we have form number 67, which is prescribed in the income tax rules to claim the foreign tax credit. Even that form is to be filled up while we are claiming the foreign tax credit. That is column C. Okay, and that's a detailed form, and that needs to be filled up. So I think with this we are done with FA and FSI. Again, summarizing that A1 to A4 to be reported by all. Then starting from table number B to G by all except for the last three columns. And FSI, very, very simple, everything getting related and in case you are filling the automated form, the income automatically gets filled. So with this, I would thank Deepak and Jatin for taking it nicely. And sir, I would request you to please, take us through the overall summary before we take up question and answer sessions.
Uh, Mr. Jay, Jatin, and Deepak have discussed schedule FA and FSI very well. And I think I'm going through the questions raised by the participants. Most of the questions which they have raised have already been answered by the team,
Yeah.
Deepak, Jatin, and Jay sir. That now there should be no confusion regarding filling of schedule FA and FSI. But most of the questions which I go through are regarding whether an NRI has to fill schedule FA, FSI. In this regard, I should say that NRI and persons who are not ordinary resident are, no, it is not mandatory for them to fill schedule FA, FSI. But if they are filling it, it's good. And if they are not filling it, then no penal action can be taken against them. Regarding joint account holders, Mr. Jay has already told that whoever is holding account, whether husband, wife, both are holding account, both have to show these accounts in Schedule FA, and if any income is arising from that account, then such proportion has to be shown in Schedule B, C, D, whatever it may be, or FSI. So there, all clarity is there, and one person has written that he has got email although he is non-resident. Mr. Govind Sangal. He has mentioned that he is NR and has FD interest income only in India. Received email stating for disclosure of his foreign asset in Schedule FA. In this regard, I should say that please check your return which you have filed for assessment year 25-26. Probably you have shown yourself as resident of India. So it is necessary that while filing your return, you should ascertain your status whether you are resident and ordinary resident, or resident not ordinary resident, or non-resident. You have to specifically mention in your return. And if you have wrongly shown your status as resident, please revise your return and change your status in your revised return. Show yourself as non-resident so that department can take note of that. In case of nominee, whether to disclose account details, this is the question raised by many of the persons. No, nominee has not to disclose any asset in Schedule FA. He will be liable to show this account or asset only when the asset is taken is in name, if it is in ownership. Nominee is not an owner, and property will get transferred only after such event happen which has been mentioned in the document. So nominee has not to show his asset in Schedule FA. Regarding negative balance in account, Mr. Jay has already taken it up. Regarding unlisted share, this has to be shown in equity and debt table only. And regarding intraday trading and buy sell shares, thousands of time in 2024, reporting of demat account is required. And if it is a business income, then it has to be shown in business head. If it is investment, if you are investing, then you have to show all your investment in your required schedule.
Yeah. Yes, I think broadly you have covered. Couple of other points like dormant accounts. If the accounts have become freezed or dormant, even those are to be reported. There is no exemption per se. And there's another very interesting question that in case I have received dividends multiple times, are they to be reflected? So as far as FA schedule or FSI schedule is concerned, it is a total dividend received during the financial year from a tax perspective is to be reflected. But yeah, maybe for your advanced tax purposes, you may have to bifurcate it. And sir, just one last question which I found to be interesting, was a refining company selling petroleum products to Bangladesh. The company has a country office in rented premises. The question is not very clear, but if it's an ordinary resident and earning business income, there is no such reporting requirement per se. He may have a rented premises. So FA is more about individuals other than business or profession. Though you may have a business income there. And one last point which I would like to take up before Deepak has a few clarifications to make, that I have shares under ESPP, which was received by me in the year of 2003. Thereafter, I have become non-resident and was abroad till the year of 2023. I have been receiving dividends on these shares since last few years in my overseas account. I became a resident in India last year. So I'm sure last year here he's referring to the financial year of 24-25. How should I report this in the IFI schedule? So as you are a resident and ordinary resident, number one, this asset needs to be disclosed as Deepak elaborated on how it is to be disclosed. And the dividend which you have received as an ordinary dividend, if last year was the first year, that income needs to be disclosed as an income. And again, summarizing that why we are doing this session, as 31st December is the last date. And this is a golden opportunity for all of us to revise our returns in case we have missed anything on FA and FSI. And before I request Chairman Sir, Deepak, do you have anything to take up?
Yeah, I will take up some interesting questions. Very
Just
few
one or
questions.
two
Yeah,
because
yeah,
time is
yeah.
very limited.
So
Yeah.
one question pertaining to foreign loan accounts. So I think this can be ignored because Schedule FA is related to foreign asset or foreign income only. And one more interesting question we also experience sometimes is in FA schedule, do we need to report each equity purchase or we can consolidate all the investment for same company? So if possible, try to disclose separately all the investments, all the equities. Otherwise, you can show consolidated only.
ठीक है. Thank you, Deepak.
Yeah.
Thank you for taking up some relevant things. And I would request Chairman Sir to have the final word, and thereafter we can conclude.
So, friends, I think every good thing has to come to end. So, we have to honor the faculty as well as the stature for the time what he has given. We have some pleasantry here. So, before I go and do my duty, because my vice chairman is in international affairs. Some important things are being discussed over there.
Yes.
But let me tell you a small data that around 2,200 members have joined today's webinar, and this will be given on the My DLS portal also. The around 100 questions have been raised by approximately 81 members, those who have asked multiple questions also. So I am thankful to all of them also, because it is because of the participant that this particular webinar is successful. And I hope the faculty has done their issues. They have cleared so many issues. Now, whenever something is discussed, I always give some homework to my faculty and my, you can say, friends with my own thinking. So I'm thinking of this that let us have a small booklet wherein we can cover the Schedule FA and FSI as well as how that has to be covered in the Black Money Act. There are certain things which I was discussing with sir that has also we are going to refer to the department that if I have made an investment of let us say 10 lakh rupees and out of that only 1 lakh rupees I have paid and the information have come for the 10 lakh, how to justify that? There may be joint ownership, then how to reflect those things in the cases of then the investment which are made through trust and a property is purchased in the trust, then whether I have to show in both in property as well as investment in the trust. So some of the complex questions which the faculty has already dealt with and they have tried to give their answer. Friend, this is always I say that there are disclaimer from the Institute of Chartered Accountant that whenever any faculty is saying or giving an answer, this is a disclaimer that this is not the view of the Institute of Chartered Accountant, and I must clarify this. As well as the same is from the department, but in any case, we know that the faculty is giving the answer from their expertise very well. We have covered the entire questions. Still, if anything is left, you have a feedback program, feedback form which will be populated in your inbox. So do give us the honest feedback so that we can improve in any of the further webinar or seminar in this case. And before I say for the vote of thanks, let me honor the faculty as well as say Sitesh sir. May I request the office to give me the so let us have a clap, virtual clap.
Thank you, sir. तालियां थोड़ी ज़्यादा होनी चाहिए हमारे अपने कॉम्पिटिशन के लिए। Thank you very much.
Deepak ji,
Yes, sir.
how does it? I am happy with your hand.
बहुत अच्छे तरीके से एक्सप्लेन किया।
Thank you.
देख रहा था प्रॉपर नाम वाला है। So, any final view, Sitesh sir, if you have anything to add, final something?
In this regard, I want to say that if there are any further query,
Okay.
the ICAI may compile it and send it to me on my mail. I think Prachi is having my mail. We will be honored to reply those queries, and if any amendment or suggestion in forms
Okay.
or act or anything else, it should also be forwarded to my mail. We will explore it, discuss it, and if possible, we may take it further.
Thank you very much for giving your all time. So I am thankful to Sri Sitesh Verma ji, JCIT, OSD, Investigation Unit 6 for giving his entire time. And I once again say that he has taken the courage for driving because train got cancelled, it was too much delayed and there was no flights which are available. Thank you very much sir for taking so much time. And the issue of chartered accountant is always indebted to the department for this. Sir, we are not known as the solution provider, but we are also known as the partner in nation building. And we are going to have the WOFA 2.1 in the 2.0 in 30th, 31st and 1st of February, where we are eyeing around 20,000 members. So that was also going on. I'm also thankful to Sri Jaikumar Tejwani ji for the making this webinar lively and compiling and taking a lot of effort in making the presentation. and I have already requested him to have a booklet so that we can have the booklet for the purpose of the members, how to present, how to show them, and wherever the normal pitfalls are there, if we can give them and some of the question answer. And then the questions which are not being answered or which are not being raised, and you can send it at scitex@ici.in, and we at Scitex, the entire team, will be glad to see to it that we are also thankful to the speakers, CA Deepak Kakkarji and CA Jatin Sapraji, for handling the session in such a coordinated manner that we have not been able to identify whether it is one speaker or it is the combination of more than one. So all the three faculties, they have done their job in such a manner that the relay race, when the one person runs, the other take over the charge, and finally the winner is the participant, those who participate. So thank you very much for joining in such a large number. Do send your feedbacks and queries. We are waiting. Thank you very much. Sign off. Good day. नमस्कार, थैंक यू, और आप सब लोगों को धन्यवाद.
Thank you.
Thank you.